Greetings, members, one and all of the Salivation Nation. What other effects are there on the gold market? Let's explore! And there's a couple of items here that have occurred over the past year, in 2020, have not really been talked about a whole lot in the community. But many of you in the audience certainly do keep up with some of the stuff and found some pretty interesting little nuggets of information here. And one is Aussie Alchemist, who shared with me some information actually quite a while ago, but I reminded him to send me some information so that I can cover this topic. And there's a lot of complexities, that goes on with the COMEX and the LBMA, but there's some news that we can take into account that I think is going to have an effect, or if not already has had an effect on the markets. Now, there's a lot of crackdown on gold sourcing. We've talked about that on this channel, but the LBMA has come up with new norms on gold sourcing, and it irks the Indian bullion sector, according to this article from November of 2020. And in its advisory, the Century said the destination for 95% of the gold from East and Central Africa is Dubai, where criminal networks, armed groups, and the corrupt use it for money laundering with these conflict gold. And that led to what happened back at the end of July from the CME Group delisting Al Ittihad Gold Refinery, DMCC, the gold brand here, from this press release, effective July 31st, 2020. The Commodities Exchange, or COMEX Exchange, has suspended registration warranting of the Al Ittihad Gold Refinery, DMCC, gold brand, above and gold and Dubai, United Arab Emirates, for delivery against the exchange's gold futures contract. As such, any unwarranted Alet gold, 100 troy ounce bars and kilo bars at exchange-approved depositories will no longer be deemed or reported as eligible for registration. Any currently registered Alet gold through 6 p.m. on the 31st of July 2020 will continue to be deliverable against the exchange's gold futures contract until such warrant is canceled. Once the warrant is canceled, the material cannot be rewarranted until further notice. The Commodity Futures Commission will be notified of this brand suspension during the week of August 3rd via weekly notification procedures set out in Part 40 of the CFTC's regulations. So there you go. Very interesting indeed. And, you can help but wonder if maybe some of this may have some impact on how they report some of their data. And, you get into the meat of some of these things as far as deliveries and what's going on with data, with deliveries from CME. It has raised questions for some in the community. And people have done videos and talked about it and different aspects. I don't fully understand all of it because the reason why I haven't covered that in great detail is because there is so much that has been talked about before. I've seen it before where people say, well, look at this. They're missing contracts, and how are they going to deliver this gold, these shadow contracts and the like. And it turns out that nothing happens after the spot price. And I believe that probably some of it could be delayed delivery, or they're just not updating their numbers in time. But I haven't really looked and took a deep dive into past years to see what kind of trends or patterns there are or how those numbers come about. But it does raise questions, and people are concerned about delivery of gold to back up those futures contracts. Notwithstanding back to kind of what's going on here with this particular article here, the Indian bullion sector is disturbed by this or upset by this. A move by the London Bullion Market Association to check laundering and conflict gold by fixing some norms has irked the Indian bullion industry. LBMA, one of the most influential gold market authorities, has in a letter to various countries with large gold markets said that it would stop gold from these countries if they don't meet the regulatory standards. The association has sent letters to India, United Arab Emirates, China, Hong Kong, Singapore, Russia, South Africa, Switzerland, Turkey, the UK, and US. It seems like in this aspect I may have actually covered this in the past, but I think this kind of really ties it in with what the CME group has done there too. The LBMA has said that if these countries do not meet the standards, they would be blacklisted. The association is perhaps acting on and as an advisory issued this month by the Century, that's back in November here in this particular case, the U.S.-based investigate policy body that tracks dirty money connected to African war criminals and transnational war profiteers. It attempts to stop those benefiting from violence from the international financial system. A look at the advisory in the LBMA letter perhaps indicates that the UAE is probably the target of the norms announced by the London Market Authority. In its advisory, the Century said that the destination for 95% of the gold from East and Central Africa is Dubai, where criminal networks, armed groups, and the corrupt use it for money laundering with these conflict gold. The Century terms it conflict gold in view of armed conflict and corruption in countries such as the Congo, Sudan, South Sudan, and Central African Republic. And that is to somewhat be separated from blood gold. People talk about blood diamonds. Well, blood gold is kind of where slave labor is essentially used. People die over it, especially mercury poisoning and what we've seen in Central and South America, mining gold under very dangerous and illegal conditions. As gold prices have gained in recent years, there has been a rush in gold mining and refining in those conflict areas, and nearly all of those gold from these centers reach Dubai. These gold find their way into Dubai after being exported or smuggled to neighboring nations such as Uganda, Rwanda, Cameroon, Kenya, Chad, and Burundi. The Century's advisory said that the UAE should plug the regulatory loopholes, and gold industry actors such as the LBMA should engage United Arab Emirates authorities to press for third-party audits and cap gold cash transactions above a certain limit. Already, the Organization for Economic and Development Cooperation, a group of 37 nations, has come up with responsible sourcing guidelines for gold. The LBMA's move is the first initiative by market or state authority in trying to combat illegal and unethical gold production and trading. LBMA Chief Executive Ruth Crowell told Reuters that the London body wants to work jointly with key markets rather than disengaging them. But the bullion industry is in no doubt that the UAE, particularly Dubai, is the target, as there are issues with gold trading in the Gulf region. If the issue is not addressed by the UAE within a specified period of time, refiners across the world could be asked not to source gold from Dubai and UAE. And that would be something, because that would have a great effect on the market, for sure, if that doesn't occur. Dubai is essentially the gold trading mecca of the world. It could undo all that the Gulf nation has done in the last 2 decades in making the country an important gold trading hub. UAE Foreign Ministry has said it will examine the concerns raised by the London body and come out with a mechanism to address the challenges. And here's where the Indian industry calls for setting its own standards. LBMA's directive cannot be ignored, as international and Indian banks prefer dealing only with refineries accredited by the association. The LBMA letter has irked the Indian gold bullion industry, which feels that the London body has acted arbitrarily. There are suggestions that the Indian bullion trade join hands with the Dubai trade and come out with their own standards that will be widely acceptable. The sentiment in the Indian bullion sector is that formulating such a standard will render the LBMA redundant, with India being the largest consumer of gold, accounting for nearly 30% of the total global consumption. Let that sink in for a moment. That's how important gold is to India. And by the way, they're large consumers of silver also. But those who are not enthused by the move to take on the LBMA on the issue are of the view that the Indian industry needs to address a few issues such as responsible sourcing. They also wonder how jewelry exporters would meet their buyers' demand to prove that the gold they used was from an LBMA approved refiner. In particular, jewelry exporters feel they could face financial problems since some of the global banks catering to them ask for sources accredited by LBMA. This could result in some banks avoiding Indian exporters, which could, in the longer prospects, hurt the industry. Bullion industry players are of the view that Indian refiners need to comply with global standards, and it's time for such an initiative. The letter has also led to fears that it could lead to vested interests monopolizing the trade, and this is one reason why Indian players think the main gold-buying nations such as India and China could come together and set new norms in bullion trade. Wow, this could be something else to see what's happening. Could we have two spot prices, from that? I don't know. It'd be very interesting to see how that plays out. The other suspicion is over why the London Association move has targeted only selective markets. If the LBMA has issues with the origin, then it should bar gold from these origins, then targeting trading centers. A general view in the Indian bullion industry is that LBMA is an association set up to protect the interest of its members, and the initiative should probably come from the United Nations Security Council, the way it passed a resolution on blood diamonds. Incidentally, the blood diamonds also came from these sources, which are now accused of trading conflict gold. You heard me talk about that before there. So very interesting indeed. It's going to be fascinating. We could have a split and a powerful new market between the United Arab Emirates and India, and maybe China would surely go along with it. And then, we already have the East and West spot prices and have already somewhat in place, and the arbitrage between them, it's fascinating to see. And some of this stuff, I believe, will obviously affect the markets for sure, but the price as well. There you go. Fascinating indeed. Thanks again to Aussie Alchemist for sending this information to me to share with you all. So there you go. There's other factors that can affect the gold bullion market out there. So I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.